ironically enough, two of my worst performing positions both saw double-digit gains in the last month, which sent my portfolio skyrocketing into the green to deliver near market-beating returns. And in this month's portfolio update, I'm going to tell you all about it, and I'll share with you how my portfolio performed as a whole, along with which stocks I've been swooping up more shares of in the last month. But first, in case you're new to the channel, my name is Ryan Williams, and I am on a mission to democratize dividend investing. I think this is something that literally anyone can do to start building passive income, and I want to help you do that. So if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Also, leave me a comment below and let me know which stocks you bought in the last month. I'd be curious to hear what you've been adding to your portfolio. Anyway, getting into it and taking a look at my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to it in the description of this video. I hope you check it out. But anyway, this tells us my portfolio is currently valued at $46,165, which isn't quite at an all-time high, but it's pretty dang close, and either way represents a huge jump in value compared to this time last month. From the end of May until now when I'm recording this video, which is June 27th, my portfolio jumped nearly $1,850. And breaking this down between share price returns and dividend income, most of this did not come from dividend income. I only brought in about $133 in dividends in June. And according to this, across my entire portfolio, I gained about $1,700 in unrealized gain across all of my different holdings, which is pretty nice. And between the two, this represents a 4.2% rate of return in the last month, which is really, really nice. And if we look at this chart, my portfolio is the blue line right here. We can see that I'm like neck and neck with the rest of the market. In fact, looking at this, I am beating 2 out of the 3 major indices in the last month. I'm definitely beating the NASDAQ, definitely beating the Dow Jones, and I am neck and neck with the S&P. It's only got an edge over me by 0.06%. However, looking at the rate of return on a year-to-date basis, I am still trailing the rest of the market by quite a bit. I'm only up 2%, which is really nothing compared to the S&P, who's up 15%, and the NASDAQ, who's up 30%, more than 10x the returns that I'm seeing. However, zooming out a little bit farther, looking at all of 2022's performance, both the S&P and the NASDAQ saw major drawdowns last year, whereas my portfolio was basically breaking even. And if we take a look at the timeline between the start of last year, 2022, until today, because my portfolio saw less of a drawdown, it is still beating the market. All 3 major indices are in the red in this time period, and I'm just barely up about 2%. And I share this with you not with the intent to brag or make it seem like I've got it all figured out because of this one cherry-picked timeline where my portfolio is outperforming the market. Instead, I think there's a lesson here. My portfolio is set up to be more defensive by design, so although there will be times like this year-to-date period where my returns aren't as high, there will be other times like during the down market in 2022 where my portfolio didn't see less of a drawdown, and because of that, my overall returns are actually better than that of the market. In other words, it's not always about higher risk, higher reward, because the more drop in share price that you see, the more returns you'll have to generate to make up for that loss. Instead, as we saw with that one cherry-picked timeline, by avoiding all of that and incurring less losses, you can actually get a better return. But anyway, going back to my spreadsheet and taking a look at my annual dividend income, it's currently reading just under $2,100, which is a jump of about $35 compared to last month's reading, which was sitting at about $2,060, so I'm pretty happy with that gain. And looking at this on a year-to-date basis, at the start of 2023, my annual dividend income reading was at about $1,915, so from then until today, I've gained about $181. But anyway, moving on and looking at my best and worst performing stocks for the month, the only one that was down any notable amount was AbbVie, who saw a 3.6% loss, and it looks like that puts them right there at their 52-week low. But everything else is pretty tame. Main Street was only down 1.5%, Altria Group and Chevron were hardly down at all, which brings us to the best performers, and there was a lot of green in my portfolio in this last month, guys, as you can see. Starting here with Intel, which is undoubtedly one of my worst performing positions, definitely one of the underdogs in my portfolio, but in the last month, they were up 14.6%, so a very big jump, which brings them to a year-to-date gain of about 25.6%. It's good to see Intel coming back from the dead. I need this to keep going up. My second best performer in the last month was Kilroy Realty Corporation, KRC, who saw an 11% gain in the last 30 days, but they are still down year-to-date quite a bit, down nearly 19%, and then in the last year, guys, they are still plummeting down about 44%. And then my third best performer was Williams-Sonoma, who is the newest position in my portfolio. In the last month, they jumped 10%. I didn't get to see all these gains because I bought somewhere right in here, and we'll take a look at that in just a moment. But looking at their year-to-date performance, they are up about the same. So pretty much all of their gains so far this year have come just in the last 30 days. And looking at my position, like I said, I've only had this stock in my portfolio for maybe about 2 weeks or so now, and I have 4 shares at the time. And the current share price is sitting right about where my average cost per share is, which is, I mean, no surprise because I just bought into it. But anyway, moving on, the fourth best performing stock in my portfolio still saw double-digit gains in the last month. That's Snap-on, up 10.4%, and then year-to-date, they are soaring, guys. They are up 23.5% and sitting at the top of their 52-week range here. But then going down the list, looking at some of the other notable performers, Lowe's definitely crushed it, up 8.25%. Apple saw a 7.2% gain. Johnson & Johnson and Verizon both saw really nice gains. Then the rest of them were pretty solid as well, going from 3% all the way down to just about breaking even here with Starbucks. But anyway, switching gears and getting into all of my purchases for the month, you guys know me, I had to throw in a little bit of KRC there. I spent about $120 on KRC and picked up 4 more shares. And also for the first time in a long time, probably about a year or so, I added some more realty income to my portfolio. I spent $180 and picked up 3 more shares of that. And then you guys already know, I started that position in Williams-Sonoma and invested about $500 so far and picked up 4 shares. And then in addition to those, I invested $50 per week into my Roth IRA, invested $200 total throughout the month, which brings my total purchases in June to just over $1,000. And then on the topic of my Roth IRA, which I call Margarita money, this is sitting at all-time highs right now. There's about $4,300 invested in this portfolio, and in the last month, it was up nearly 3.4%, which leaves me with an all-time gain barely in the green here, 0.3%, and I'm down in terms of share price, but with the dividends I've received, on a total return basis, that brings us here in the green. And so taking my $4,300 Roth IRA that is bringing in nearly $160 of dividend income, and adding it to my $46,165 brokerage account that is generating almost $2,100 of dividend income, this brings my combined value to $50,518, and this portfolio in total is bringing in $2,254 or almost $190 every single month on average. And this is the first time I am seeing this combined portfolio value over $50,000. I'm not going to be able to retire anytime soon off of that, but that is a really cool milestone. It's one that I've been working towards for a long time. And I've told you guys this before, but dividend investing is a series of small victories, and you've got to celebrate every single one, no matter how big or how small that milestone is. It's really cool, and it's emblematic of a step in the right direction, so you got to give yourself a little pat on the back. And now switching gears, guys, showing you my due diligence list, which is basically what I call my watch list. I took Vici Properties off my due diligence list because I actually have it in my Patreon portfolio, which you can check out by joining the Patreon community, which there is a link to in the description of this video. And I also removed Reliance Steel and Aluminum Company, ticker symbol RS, because I just felt like the steel industry was going to be way over my head, so I thought I'd skip that one. And this just leaves Rollins as the lone survivor left on my due diligence list, but I really should move it over to my buy list because I'm pretty certain I want to have this company in my portfolio at some point. But I'll tell you what, I am in no rush whatsoever to add a new position to my portfolio right now. I just added Williams-Sonoma, and at least for the next few months, I'll be dollar cost averaging into this position every single week to make it a more girthy portion of my portfolio. And I'm also going to continue nibbling at KRC. I want to get this position up to 100 shares. I think I'm about 30 shares away from that, and then I'm going to call it good for a little bit. Plus, with KRC and Williams-Sonoma, I think they're both looking like pretty attractive buys right now. And if you want to learn about some more attractively valued stocks, then check out this next video right over here where I'm telling you about 3 that are deeply discounted and all look like great pickups right now in the month of July. So click right over here to check them out, and I'll see you in the next one.